Scotland's got a lot to answer for, coming out with a report that basically said to all customers that they should get out of the markets now. That's just wrong, because obviously different clients can tolerate different levels of risk. What's important to know is that the analyst that created that has been prophesying the end of the financial markets now for over 5 years, and now he comes out with this statement, and I suspect that markets will continue to be crocodile teeth. They'll be volatile up and down, and depending on which day you read his report, you'll go, he's got it right. But the reality of it is, I've come back like many of you have. I've come back to seeing the world in shock over oil prices dropping, over China, indeed over potentially migration issues in the EU, and all of a sudden all the doomsdayers are being listened to. It's then compounded in Australia with the situation that we now find ourselves in with Queensland Nickel and Clive Palmer, the situation we find ourselves in with Masters, Dick Smith, and indeed BHP being sub $15 a stock. You know, these are things that actually put your clients and make them worry. My first contention to all of you is, now is the time to get on the front foot and go and communicate to customers. You owe it to them. And in that communication, you've got to become well-versed. You've got to become well-versed in terms of answering things with nice, succinct little messages. Here's a couple for you. The first one is, look into the RBS Scotland analyst. Look into the fact that as a doomsdayer, he's been wrong on 4 occasions so far. Look into the fact that the Masters model was second to market. It's second to market second to market with the bad business model, second to market by going into the wrong places with the wrong offer. Dick Smith was in a very low margin business against some very, very savvy competitors, and Dick Smith was raped and pillaged by the venture capital company that took it to market. It set such high requirements for performance that you couldn't meet it in a low margin business, and investors have been paying the price. Queensland Nickel, it's a mono or a silo-driven business that sells one basic commodity, nickel. It's selling it at a time when nickel, the bottom's fallen out of the nickel market. It's been raped and pillaged by its management. That's my assessment from reading media. I have no inside information. I haven't looked at analysts' reports on it or anything, but if the media can be believed at all, the situation is it's a mismanaged company in a market where the bottom's dropped out of it. That shows up its fragility. You've got BHP. BHP has not only got issues in South America, it's gone into shale oil in America, which might have been a great gamble a year ago, but the reality of it is it's gone and now had to write down on its balance sheet a whole lot of losses for those investments, but still fundamentally, and then on top of that, you've got the iron ore prices being where they are. But fundamentally, it's a very well-managed business that will be there tomorrow, unlike the other 3 that won't be there tomorrow. What your customers want to know is, what does it mean to them? And what it means to them is well-managed companies with good products and services, with solid balance sheets, are going to be there tomorrow. They may have highs and lows and all the rest of it, but your job is to actually know some of this and know some of the things about the stocks they hold and be able to give them stories. China is growing, let's say 6%. Let's be a doomsdayer and accept 6%. $11 trillion at 6%, and it gets slammed, and America's $18 trillion growing at 2% and a bit, and it gets heralded. What gives here? Come on, don't just be negative about China because you read an analyst report. Learn a bit about it. Yes, China has some worrying problems. It has worrying problems. Its debt to GDP is close to 300% debt to GDP. But if you have a look at where that debt is, the debt is not with government. In fact, their government debt as a percentage of GDP is lower than is around Australia's. It's not in the private sector. It's not households. Theirs is lower than Australia's. Australia's, because they don't borrow to buy, it's in the private sector in the main. So just over a third of the debt that is held in China is through corporates, not financial institutions, through corporates that may then have a cascading effect on the financials, on the banks, but in the main it's in property. And so what you've got to do is, when you start seeing these doomsday things about China, you've got to put it into context. An $11 trillion country, GDP country, that is still envisaged that by 2029 will equal America, and they will both be nearly $30 trillion by then. You've got to start to say 1.3 billion people, and then last year or the year before everyone was slamming it, saying one-child policy. Well, one-child policy is going to mean an ageing population. Well, what do? They're a command economy and a command government. They turn the screw the other way, and now all of a sudden some people in China are allowed to have 2 children. If you actually look at stats, not just market rhetoric or my rhetoric, look at the stats. The confidence indice in America now is 92 to 94%, depending upon which poll you look at. You look at employment. They're at full employment now, with unemployment being under 5%. Yes, there's some wages issue that basically wages haven't crept up as much as maybe inflation has and the like. However, America's bullish. Well, America's the engine room at the moment for the world. You've got India starting to take its place. You've got Mexico starting to take its place, and you've got technology advancements happening. You don't have to believe this, but technology is coming. It's going to create productivity change. Go and buy the latest pair of Nike in America. They're $450 versus the second most expensive at about $350. And that most expensive runner now is 100% machine manufactured. 100% machine manufactured. So that means all those jobs that were in China, Thailand, Vietnam, that everyone was slamming Nike for and saying he used slave labour, is now coming back to America. Who are the countries in the world that are the best at robotics? Germany, America, Japan, China. These countries are going to excel in terms of productivity. It may not flow through to labour hiring and wages and the like, but start to look for companies that have got exposure to the countries that have got GDP growth, the companies that have got growth prospects and all the rest of it. It's not all bad out there. I'm very optimistic that at the moment, yes, we're going to go through volatility over the next 12 months, but I think at the moment everything's on sale in terms of stocks. Now's the time to actually be getting some exposure.